I mean, do you think that gold is moving as, historically it's moved inversely correlated to real rates? Do you think that's what's been driving gold here? Do you think that people are starting to get worried about the supply story around bonds? Do you think this is actually, it's a, I wouldn't call gold an illiquid asset class, but it's definitely not as liquid and large as like the US Treasury market, for instance. Do you think this is just some incremental buying that's driving the price up? Like, what do you think is moving gold here? And are you a fan of the asset? I actually am not 100% sure your opinion on gold. Like, do you like it as an asset?
Well, then you haven't been listening to enough Bob Elliott commentary. No, I love gold as an asset. And as a portfolio asset, and the reason why that is it's a diversifying exposure. And so I think a lot of folks don't realize like gold outperforms bonds about half the time in equity drawdowns. So it's a better diversifier than bonds, in 50% of weak equity markets. And, everyone holds bonds and essentially no one holds gold. So, which just doesn't make any sense from an empirical perspective. And the last 5 years have been a pretty good test in terms of showing how gold has provided a diversifying position relative to bonds in terms of an overall portfolio. So, an allocation of 10% of a strategic portfolio to gold makes a ton of sense. That doesn't necessarily mean, at times it's tactically a good buy, at times it's tactically a bad buy. What I'm talking about there is I'm just saying strategically, you hold bonds in your portfolio, hold some gold. That's plain and simple. I think in terms of gold from a more tactical perspective, I don't really think what we're seeing is much of a reflection of people's views on U.S. monetary and fiscal conditions driving the gold price up. Almost all the demand that we've seen in the gold market in the last couple of months has been concentrated in the Chinese gold markets, seeing the Shanghai premium trade relatively significantly, domestic-based gold ETFs trading at 30% premiums over the spot price, activity in the Shanghai futures market being like 4x what it was last year. So most of it is related to Chinese residents trying to figure out ways to get money out of yuan and into other assets when things like Bitcoin it's not available because it's illegal, or not as available because it's illegal, or capital controls are in place to move money offshore to find dollars. And so I think that's more of the story. It's more of a Chinese concentrated story. Western investors keep selling gold despite it going up, which is kind of a wild thing. It's like the only asset in the world that people keep selling when the price keeps going up.
That's interesting. One thing that I've encountered, less so with gold, but more so with Bitcoin, which is, depending on your view, sort of a similar, at least narrative around it, is one of the challenges that I've always bumped into around Bitcoin is doesn't have a yield. And I know that this is a thing for gold proponents as well that they've run into. This is why Paul Tudor Jones calls it the barbarous relic, right? It's because it doesn't have a cash flow and people can't back it into a DCF, or they can't model out what the returns are going to be. And that's not an attitude that I have, personally. I know that's not your perspective as well, but maybe I've always sort of ascribed the yield story as being, pretty challenging for gold, because no matter how you can backdate it, you can show that it's a diversifier in portfolios, you can show its relative performance, but many people just, revert to this line of, well, there isn't any cash flow, so there's no intrinsic value. That's a powerful mental model that a lot of people have.
Yeah, I think it is, and I think what it is it's a model built on experience with based primarily on dollars, where fiat yielding fiat looks better than non-yielding hard money in an environment where we've had 40 years of secular disinflation. But I think if you just expand your perspective a little bit more, what you'd find is that there are many instances where fiat money, let's say fiat bonds or fiat cash, meaningfully underperforms bonds, right? Or meaningfully underperforms gold over time. And if you look at the last let's say 150 years of fiat currencies in the developed world, like holding gold would have been a better trade than holding those currencies in something like 60 or 70% of instances. And again, like what I'm not saying, put all your money in gold because that's the best asset to hold. That's not what I'm saying. What I'm saying is like everyone seems convinced you want to hold bonds, but the empirical evidence narrowly last 5 years, broadly, during the floating exchange rate period since 1970, over the last 150 years of fiat money, like how many other ways do I have to prove to you that gold is a good diversifying asset, without, people finally accepting that is the reality that's out there. Like it's almost like it feels like it's a religious belief that to be denying gold as being a good portfolio diversifier, and that it doesn't make a lot of sense.
Yeah, I'm with you. I'm with you on that, and I think there's a reason that I think there's a reason why macro guys tend to like gold, and they have a more flexible understanding of how to make investments and asset classes writ large, right? Like I think a lot of the popular discourse around investing is dominated by equities guys, right? Equities guys and gals who,
right. That's right.
they have this very dogmatic view around how to, shove something into a DCF and model out the returns, and that just feels very comfortable. But I do think there's obviously tons of value in investing in things like gold or commodities or whatever it is. And there's
right. I mean, certainly, certainly commodities. I mean, you and I might not see eye to eye on Bitcoin, but I will say this, that the fact that Bitcoin doesn't have a yield on it is not a particularly relevant consideration to thinking about whether it's a good storehold of wealth or transaction currency, right? That's not the matter. That's not the matter of concern related to it. It certainly has plenty of volatility. Like that's not the problem. So it's and I think you're right. I think part of it is like there's a beautiful tangibleness of bonds and their yield, and of stocks and their dividends and cash flows and things like that. And there is more ambiguity in many ways, it seems, with things like gold and Bitcoin and commodities and things like that. But we've seen a long track record of those assets having positive returns, and returns that are complementary to a portfolio, to an overall investment portfolio that makes sense to include them, not at 100%. Just 10% in commodities and in tradable commodities and gold into a 60-40 portfolio would meaningfully improve the long-term risk return profile without creating a return drag. And so that's a pretty good trade to make.